Hey everybody, Boris with BK Forex. Welcome to the weekly technicals for commodity dollars for Aussie dollar, dollar CAD, and Kiwi dollar, July 10th to July 14th, 2017. And I think the big story in the COM dollar land has been the collapse of the carry as far as the Aussie and the Kiwi goes, and the inordinate strength of dollar CAD, something that we've been talking about. The relative strength of dollar CAD has certainly worked out. This was a big call for us last week, and it continues to be so because Bank of Canada, the most hawkish of all the COM dollar central banks, looks like they're going to raise rates this week. Let's take a look at the calendar and see what's happening on the commodity dollar land. The big event this week is going to be the Bank of Canada rate decision, which is expected to raise rates by 25 basis points to 75 basis points on Wednesday. And the big surprise would be if they don't do it. That is really the key surprise to the market. However, Canadian dollar has rallied so much since the beginning of the week that most of this move is really priced in, unless the Bank of Canada communicates that they're willing to take rates up to 1% before the end of the year. That is, that they're going to continue tightening up, and they may very well do so because Canadian economy is doing quite well, and the housing bubble in Toronto and Vancouver is so massive that I think the Bank of Canada feels it needs to begin raising rates in order to moderate all of the housing boom that's going on over there. So there is potential for continuation here, but only if they communicate that there's perhaps a 1% rate hike or 1% in basis rates in the Canadian yield curve till the end of 2017. At which point it would actually put it very much on parity towards the dollar, really make the CAD effectively a fresh new carry trade. And that's why it provides so much interesting potential to the upside. It still continues to have relative strength. The other big event, of course, will be the Chinese trade balance, as far as it having an impact on Aussie and Kiwi. But again, those are minor. There's no Australian data next week. There's no Kiwi data next week. And even the Chinese data is a sort of a secondary story, because really what's happening in the commodity dollar land is as U.S. rates begin to climb again on the expectation the Fed is going to get hawkish, and especially if Janet Yellen next week reaffirms the hawkishness by saying yes, they may be even on target to raise rates twice before the end of the year. All of that just continues to batter both Aussie and Kiwi as all of the carry flow comes out of the trade. Let's take a look at the levels first, and then we'll look at the charts here. So the levels, we've already come off the 77 now. The resistance is 76.50. Support, very decent support at 75, but that is a near-term support there. Dollar CAD has broken all the levels to the downside. 130 now, which was former support, becomes resistance, and now we're looking to 127 as the next area of support. And Kiwi also a little bit lower at 73.50 with support now at 71.50. Let's look at the charts here and see how everything sets up. So here's Aussie, and you see the Aussie coming off here. This is really the carry, the kind of the deflation of the carry trade, the bubble, the air coming out of it. And we did hit, remember we talked about the idea that even if Aussie rises to 77, it was looking at a quadruple top over here, and that's exactly what happened. It hit a very hard cement ceiling against which it came down. Looks consolidated, but at this point, unless we have some sort of a incredible change of sentiment against the dollar and U.S. yields begin to compress back below the 220 on the 10-year, Aussie really remains a sell the rally mode here. Yes, it looks bullish on a longer-term basis here. It still looks like you have a series of higher lows, but I believe this resist point is a more important point, and the fundamentals go against it. So Aussie to me is a much better sell the rally at this point than it is a kind of a buy to dip trade with the potential to drift all the way down to 74, 75 as we go forward. Kiwi, same kind of a story, very distributive here. Yes, looks super bullish, but actually, and this is the interesting part, to an untrained eye, this looks like a very nice, strong trend. But if you look very carefully, we haven't made much progress over essentially a whole. If you look at the RSI, the momentum has just been seeping out of the Kiwi. So unless you believe there's a secondary burst up, this looks very distributive to me. And again, much better sell the rally than a kind of a buy to dip trade with a potentially a move down to 72, maybe even 7100 as the next couple of weeks develop. The one exception to the rule is the loonie, which has just been a one-way trade to the downside. Very strong power moves. It's ignoring oil kind of stabilizing above 40. That's helping essentially keep loonie afloat. I mean, oil dropping below 40, that is the one exogenous factor that could push us back up to about 130. But for now, this 130 level, very much the resist point. Former support now becomes resistance. Any kind of a rally here on a counter trend short recovery move is a great place to sell dollar CAD on the assumption that the BOC is going to be hawkish and perhaps even uber hawkish with the forecast of 2 rate hikes rather than 1 rate hike. The only thing that could really scuttle this whole thing is if they don't raise rates. That will be a massive, massive shock to the system, and we'll see a complete reversal back up above 130. Other than that, the Canadian dollar remains the single best commodity currency in the calm dollar land as we go forward into next week. Wish you guys the best luck, the best trading. Boris, over and out.